Investors' appetite for risk. Does the math add up enough to satisfy the markets and their money? We'll find out. And we'll also take a new look at a trend in retail. It's called showrooming. We're going to give you the names of companies that are going to come out winners from this new trend. We'll explain it more over the next hour. But first, let's take stock. The Dow Jones Industrial Average posting a decline of more than 89 points, down 0.7%. S&P 500, 1398 on the close, below 1400 again. All right, down 7 points. And yes, the NASDAQ falling a little bit more than 8 points. Let's look at the fixed income markets if we can. 2.78%. That's for the long bond, the 30-year, and the 10-year, 1.64%. Now, for more perspective on today's market activity, I want to bring in our senior markets correspondent, Julie Hyman. Julie, you've been following what's going on today. And the sell-off in the market seemed to happen almost concurrently with Harry Reid, Nevada Democratic Senator, coming out and not necessarily giving very positive news about negotiations over the fiscal cliff.
That's right. I mean, the market is just following this fiscal cliff stuff very, very closely. It's almost as though, like the situation we had with Europe about a year ago, where the market was going up and down to a high degree based on what was coming out of Europe. It still is linked to Europe as well, by the way, but really the attention has turned more towards the fiscal cliff now. And it's interesting, if you needed any evidence to show you that the market is not necessarily rational, this is it. Because if you talk to most pundits, they say this is a situation that's going to get solved sooner or later. And the market may go up and down in response to all of these little developments day in and day out, but at the end of the day, it looks like Washington will likely come to some sort of resolution.
Oh, those pundits. We got to be careful about those.
True enough.
Tell us about what's going on. Maybe there are pundits that have been opining about Green Mountain Coffee Roasters. I can think of one, David Einhorn. Yes, indeed. Hedge fund manager who has been short the stock and has been saying that the value of the shares of Green Mountain Coffee Roasters are worth less than they currently are, but yet today in after hours trading, the stock is up, what, 22%?
Yes, big bump up in the shares. Now, Einhorn, remember, first declared that he was short this company or was negative on the company last October.
Indeed.
The shares down almost 70%.
So maybe he's already made all his money.
He's not the only guy who's short, though. I mean, there's very high short interest in this stock. So going into today's report, there were already traders who were calling for potential short squeeze. That is, there's so much short interest that people have to cover their shorts when the stock goes up a certain amount. That appears to potentially be happening, and it's based on what the company said, which was pretty darn good. So revenue up 33%, profit up 22%. It was forecast that net income was actually going to go down, and it went up instead.
What was it, 946 million? The estimate was something like 904 million. And then they also said in the next quarter, they gave guidance that
for the full year, that the full year forecast is going to be higher than the company had anticipated. K-Cups apparently are selling very, very well.
Highly caffeinated, I believe. Yeah, in some cases. All right. Julie, just stay with us because I want to bring in, maybe he's not a pundit. I would say he's more of an experienced individual. John Manley, Chief Equity Strategist for Wells Fargo Advantage Funds, where he helps manage more than $200 billion. John, the reason I say not a pundit is because you've got a couple of notches in your belt, right? I mean, you've weathered not only the current market turmoil, but many different types of markets, right?
I've aged in dog years. I'm a pundit emeritus.
All right, well done. And the reason I say that is because I'm wondering, you've seen these kinds of things before where specific events end up taking on a life of their own, and yet for individual investors, maybe they ought to just pay attention to the companies that they own and how they're doing.
I think, and some of the macro themes as well. The market's fixated on the cliff. I don't know if we're going to hit it. And I think we're going to fix it, but it's going to look like we're not before we do. There's no way that either side can appear to be amenable. They both have their extremes to pacify at this point in time. So while I think it gets done, my suspicion is it looks more like it won't get done before it does get done.
So crampons. Maybe you got to put your crampons on when you're trying to scale that fiscal cliff.
Dig in, be willing to take a few bumps on the way down and keep on climbing.
And so is there even any point in trying to handicap this thing? Or as Pimm said, do you just focus on the fundamentals, the earnings, as much as you can?
Well, you've got to take into account what's going on. I think this is a classic buy weakness. They will have to fix it because it's too terrible not to do it. The heat really doesn't go up until the first or second week of December. So between now and then, for another 2 weeks, I think it's pretty much going to stay unresolved, and you're going to see a lot of posturing on both sides.
And I imagine your time horizon is a little bit longer than the next 2 weeks.
I have no idea what happens over a month. I try and look at 6 months to a year and let the market figure out what's wrong with itself.
All right, so if you look out 6 months, take us through the spring and summer of 2013. You're saying to individuals, to institutions, look, you need a plan. What kind of plan would you recommend? Because it's the plan that's important when the market goes haywire.
Well, when it looks like it's falling apart, it's really not going to fall apart. I guess that's the best thing if you're a long-term investor. And also realize what you're going to be thinking in a few years from now. There's a lot of people in their late 50s, early 60s who are going to want to retire in the next 5 or 10 years. And they're going to find income a hard thing to find. They're going to find it in some high-quality equities. Get there before they do.
And when you say high-quality equities, do those mean equities that necessarily pay dividends?
That's what I'm talking about. They can and will pay more dividends in the future. They have the cash to raise the payout.
You know, this sounds very familiar, I have to say, because a lot of people have been talking about these high dividend payers for a while. We talked to Adam Parker from Morgan Stanley. He was in earlier today. He was talking about the high dividend payers. When do they get too expensive because everybody wants to be in them?
Well, they're not there yet, and I think the fact that they've done reasonably well has put some people off. I mean, just think about the demographics. People are going to reach retirement at a certain age. They can only go so far, then they start to fail, and at that point in time, they're going to have to face the issue. So I don't think it's a question of valuation so much as it's now a question of timing the appetite of the potential buyers.
I'm glad you mentioned the word timing, because I'm wondering your thoughts about having to do with compounding. If you select a particular group of stocks that pay dividends, and as you just described, maybe there are people in their mid-50s, early 60s looking to retire, if they are able to build a nest egg, that compounding, if they reinvest dividends, can be very powerful later on. It's not necessarily what you're going to be earning right now, but it's the compounding effect on the shares and your capital 10, 15 years in the future.
Think about 5% a year or 7% a year. That really doesn't just add up. It multiplies up over a period of time. And if you have a tax-advantaged vehicle to do it, and we'll see if you do, that can be very, very helpful.
What do you think is going to happen with taxes?
Well, they're going to go up.
They're going to go up.
I am fully resolved to paying more taxes. I think there's going to be some compromise somewhere down the road.
Do you think they're going to do a cap on deductions?
I suspect so. I'm not the one to say that, but I think they will. I mean, I think there has to be some give and take on both sides. You can't just say, we're not going to pay any more taxes or we're not going to cut spending at all. They're both too high at this point in time. They both got to be fixed.
But is that informing how you're making your strategy right now?
I'm looking at the other side. I see a situation that will be resolved at some point in time because it's too painful not to resolve it. I have no idea when that happens. As I said, I'm speaking in terms of weeks as if we could say something about that. I have a sense that the budget deficit will get smaller going forward.
But I mean more the tax implications. Do you think that people will be changing their behavior based on that?
Some will. If they let the dividend tax go up, I think it will change some behavior. But there are a lot of people who really won't be affected by it that directly, too. So it's not going to be
That's what Warren Buffett said earlier today, right? That's what he was talking about in terms of investors not necessarily changing their investment profile just based on a tax change.
I'm going to go to work if I have to pay higher taxes. I'm still going to try and make money in the market, even if I have to pay higher taxes on it down the road.
You're still going to be a veteran, as always. I want to thank you very much. John Manley joining us from Wells Fargo Advisors. Thanks very much for sharing some thoughts with us. And thanks also to Julie Hyman, Senior Markets Correspondent. All right, we're going to see you tomorrow. Coming up on Taking Stock, European finance ministers are saying that they finally found the formula to nurse the Greek economy back to health, and it's not E equals MC squared. We're going to look at what this latest development means for investors next.
Hello, I'm John Sunt, President and CEO of Altegris, a leading provider of alternative investments. My colleagues and I have been in this business for decades through many market ups and downs. As you know, there are thousands of alternative investment choices. Finding, evaluating, and gaining access to the best-of-breed managers can be a real challenge. At Altegris, that's all we do. In today's uncertain market environment, many advisors are considering alternative investments for their clients' portfolios. We focus on finding the best, researching the best, and making these managers available to our clients through the Altegris family of funds. Find out what over 5,000 advisors and 100,000 investors already know.
Learn more about trusted alternatives and intelligent investing at altegris.com.
You are a business pro, monarch of marketing analysis, with the ability to improve ROI through SEO, all by COB. And you rent from National, because only National lets you choose any car in the aisle and go. You can even take a full size or above and still pay the mid-size price.
I'm going B-I-G.
Good choice, business pro. Good choice. Go National. Go like a pro.
Attention those on Medicare with diabetes. You may be eligible for an upgraded meter.
If you're tired of stabbing your fingertips to test your blood glucose, we have news that could change your life. If you're on Medicare with diabetes, then you need to know there's an alternative method for checking your blood glucose every day. You don't need to stab your fingertips anymore. The Embrace meter from Diabetes Care Club is easier to use and nearly painless. And the best news is that Diabetes Care Club would love to send you one of these meters. This method hurts less, and because you can see and hear your results, it may be easier to understand.
Your blood glucose reading is 89.
Call now to find out why. Nearly 250,000 patients have joined Diabetes Care Club. Membership is free, so is the call.
Call 1-800-935-0134.
Talk to Diabetes Care Club. You'll be glad you did.
All right, just this afternoon, the U.S. Treasury declined to name China a currency manipulator in its annual report to Congress. Now, is this significant? What does this mean for the U.S. Treasury's response to China? Well, let's ask Sebastian Galli. He's a senior currency strategist at Societe Generale. Sebastian, good to have you with us. I know we timed your appearance just to meet the needs of any thoughts having to do with this currency manipulation issue. First, what would happen if China was labeled a currency manipulator? What does that mean for them?
Well, it means automatic sanctions for China. The good news is there really is no reason for them to be labeled as such. Simply because, one, they let their currency appreciate. Number two, they actually been purchasing a lot less U.S. Treasuries, and even below what they need actually just to extend their duration on their benchmark. That is, every month they need to add an additional month. Every time the yields move, they need to adjust their yield positions, and they've been basically underperforming on that side. So they actually have been very, very good to the U.S. Treasury from that point of view. Maybe not for U.S. Treasury yields in the longer run. They've actually been, to some extent, slowing down their position in the U.S., which I guess is good news for the U.S. Treasury in the short term. Longer term is a bit more worrisome because they do need to finance a very large amount of U.S. Treasuries.
Right. In other words, the U.S. government continues to borrow money. Oh, go ahead.
It does, and I think that's the interesting issue, because as we can see now, according to different measures, we can see that some of the Asian central banks are simply diversifying out of the dollars and diversifying out of the euro, but diversifying in a bad sense. They're probably either not increasing or reducing probably their positions, and that means the financing for these guys is going to become more difficult, because not that there is less demand for it, but the price will probably increase because it will be a more risk-averse demander, and that probably will be an interesting feature, not for the next few months, but probably for the second half of 2013.
Have you been able to follow the breadcrumb trail of where these Asian central banks are putting money if they're not adding to their holdings of U.S. Treasuries or buying euro-denominated debt?
We can to some extent. We know what they've been buying. They've been buying a commodity-related currency since they're hedging a broader spectrum of imports that they used to. For example, you need energy. Imagine you're Japan. You're highly dependent on energy. That means you probably want to actually buy a commodity-related currency. Same way as many Asian currencies are highly dependent on oil, and therefore will buy these type of proxies. That means the CAD has been bought. That means the Aussie has also been bought. And that means a wide variety of proxies for commodities, as well as commodities themselves, have been purchased as part of this diversification process. That process also means that they're buying more within Asia. So they're buying each other together to help build basically their bond markets locally. So if I'm Taiwan, maybe I'm buying into China, and China, maybe I'm buying into Taiwan. It's really a bad example, but you can see where you're going in that direction.
Well, having said that, does that spell a good future for countries such as Greece, which would love to get people to buy their debt and not necessarily have to pay a very high interest rate in order to satisfy those lenders?
Well, the good news for, I guess, for Greece is nobody who is a sovereign wealth fund was purchasing their debt because they're long being off any of their.
They've got no one to lose. They've lost all their customers.
Exactly.
For it.
So the good news is anybody, any improvement means that they will get money coming back, and you may see, so some people, hedge funds, speculators, and the vulture funds basically going into it. It can only get better to some extent as long as they do the right stuff. And actually, if you bought into Greek banks and some of the Greek assets, we'd have done a tremendous amount of money. Of course, you would have been frightened out of your wits for a very long amount of time. So they're going in the right direction. Sovereign wealth funds are probably buying into Italy. They're probably buying into Spain, rolling over front-end positions. The durations, that is the amount of risk that they're taking in fixed income, is very low. And it's probably in the order of 1.5 to 2 years. And they're probably rolling over, like, say, 6 months or 3 months position in these countries. So they're playing carry trades like everybody else is.
Playing carry trades. Just a little bit more on the investor class that might hold Greek debt. Is there a thinking in the European Union and maybe even at the ECB or with the Troika that includes the IMF that they can outweight the speculators and the hedge funds? Because, as you said, there are not a lot of sovereign wealth funds that are buying Greek debt. Central banks in Asia aren't buying Greek debt. So is it a battle between those that say we can wait and we can string this negotiation along forever, and maybe the investors will just get bored, tired, or exasperated and leave this field altogether?
And they have. So they win, the Fed wins, the ECB wins. We lose if we're not playing with the right people. The good part is that it is actually happening, it's working, and that's really good for Greece. The longer-term problem, of course, is it may slow down the pace of reform. Short-term, that may not be such a bad idea. In the longer run, it's a very bad idea. We know what happened with Spain. If you read a report on the IMF in Spain in 1990s and now, it's pretty much a copy-paste of effort. So
what about the Germans? We hear that there's pushback from the Germans over the agreement to offer Greece the next tranche of aid.
Yeah, so the level of the Bundestag, essentially the party of Mrs. Merkel, which has not always been very cooperative, but
she does face elections.
She does next year, but yes, she does have support from the SPD, so the opposition member to pass any of these reforms. These guys are afraid, of course, that if they pass a package, there might be an additional potential haircut built into the package, and of course, it's always a risk. And if we believe central banks, of course, it isn't a risk. If we're more prudent, we may think it is a risk, and of course, these guys have been burned a little bit, and are being very, very prudent in I guess, in a negative fashion. It doesn't really matter that vote will go through. It will go through with the opposition party in the Bundestag. Mrs. Merkel most likely will be re-elected. She's doing a great job from a German point of view and as well as a European point of view, and therefore it's not really much of a concern, and that's what the market is doing. It's fading risk.
Fading risk. What's the biggest tension right now in Europe? Because it seems as though they're going to cobble something together. Is the biggest risk in Europe, is that the United States right now? Everyone looking to the fiscal cliff here? What are they looking for?
I don't think so, no. The real risk, I mean, the fiscal cliff in the U.S., they'll be probably more reasonable than the Europeans are. The real risk in Europe is the lack of growth. We essentially have a very severe tightening in monetary conditions. That is, yields have risen in Spain and the southern part. Growth is very slow. We're very export-oriented, and the exports in the south, there's nobody to buy, and exports in Asia, there's fewer people to buy, so we just have to hope that all these Americans buy like crazy into China, into the European Union.
I want to thank you very much, Sebastian Galli, joining us from Societe Generale. Going to watch this topic carefully in the future. Much appreciated. All right, tomorrow, don't miss a Street Smart special. We're talking about the fiscal cliff. It's entitled the Fiscal Cliff Summit. 3 of the nation's brightest business minds, John Trish Regan, with their solutions for avoiding the fiscal cliff in the United States and the dire consequences if we don't. Joining Trish at this exclusive roundtable, hedge fund heavyweight Jim Chanos, Cantor Fitzgerald Chief Executive Howard Lutnick, and retired U.S. Army General Wes Clark. It airs tomorrow right after closing bell, 4 p.m. Eastern. Coming up, we're going to look at how uncertainty over tax policies in the United States affect supermarkets. Yes, how they affect how you spend. That's next.
Around the clock, around the world, Bloomberg keeps you connected. On television, online, on the radio, and on mobile.
I always wait until the last minute. Can I still ship a gift in time for Christmas?
Yeah, sure you can. Where's your gift?
Break from the holiday stress. Ship FedEx Express by December 22nd for Christmas delivery.
Innovation. What it isn't is something that happens step by predictable step. It doesn't always stop at the lights. Sometimes it goes backwards to go forwards. It goes up blind alleys. It zigs and it zags. It wiggles. And then it lets rip. Your job is simple. Just give it the right environment.
Having you ship my gifts couldn't be easier.
Well, having a ton of locations doesn't hurt.
And a Santa to boot. Right, baby?
Oh, sir, that is a customer.
Oh, sorry about that.
Break from the holiday stress. FedEx Office.
At Options Express, we're all about options trading. We create easy-to-use, powerful trading tools for all.
Look at these streaming charts. They're totally customizable, and they let you visualize what might happen next. It's genius.
We knew you needed a platform that could really help you elevate your trading, so we built it.
Chances of making this? It's a lot easier to find out if a trade is potentially profitable. Just use our trade and probability calculator, and there it is.
For all the reasons you trade options, from income to risk management to diversification, you'll have the tools to get it done.
Strategies, chains, positions, we put them all on one screen. Could we make placing a trade any easier? Could we?
Around here, options are everything.
Yes, Mom. I'll place a long call to you tomorrow. I promise.
Open an account today and get a free 13-month EIBD subscription when you call 1-888-280-4181 now. Options Express by Charles Schwab.
If a natural disaster happened, we'd probably all meet around the grocery store.
We would all meet at a bus stop.
Oh, we'd probably meet at our neighbor's house.
Let CreditKarma.com help you build your credit every step of the way. Check out the credit report card. With our easy grading system, you can see at a glance where you're succeeding and where you can improve. CreditKarma.com. Free scores and so much more.
All right, how big an effect unemployment on performance of supermarkets is there in the United States? In other words, if you don't have a job, that means you don't have money to go shopping. Joining me now to explain is Scott Mushkin, Managing Director, Jeffries & Companies, also Senior Research Analyst covering the food and drug retailing sectors. Scott, always a pleasure. All right, let's link this whole idea of, unemployment, have a job, you've got money, but it's unemployment insurance, because a lot of this is going to run out at the end of the year for people that are without jobs. If you don't get the money, somehow, that means no shopping.
It's unbelievable. The connection with supermarket comps and supermarket performance and employment is just, it's uncanny. The correlations are really strong. And right now what we're seeing is some of the employment data is looking a little bit weaker than we would like. And then if we look at our pricing surveys, we go to 7 markets, but 3 last month. And the pricing is actually down year over year, pricing at retail. A very negative sign.
Pricing at retail, that means that what, they can't make price increases stick, or that they just have to figure out a way to get people in the stores?
Exactly. And so that usually is a bad omen for the economy in general, actually. And so we're nervous. We're about as nervous as we've been right now in the last 3 or 4 years, because a lot of our data is either looking topping out. Employment data is starting to weaken a little bit. And those pricing surveys really have thrown us for a loop, because it's been some of our best data. It's rolling over, and it's making us nervous.
All right, well, I just want to make clear that, some of the companies that you cover, we're talking about Safeway, we're talking about Kroger, right? I mean, you're talking about the big grocery stores, got thousands of stores all over the United States. Are they doing anything other than dropping prices in order to deal with this? Is there anything they can do?
Well, if the economy's going to weaken up, if employment's going to weaken up, and it's to be determined, there's not much they can do. In deflation, if we get lower prices at retail, that's a very negative environment for a company that has a very high cost basis. On top of that, what we're seeing is the input costs. If you look at corn, if you look at wheat costs, if you look at chicken broilers, they're not coming down at the wholesale level.
Right, you got the results of the drought in the Midwest, and you have a lowering water table in the Mississippi River.
Exactly, and it's off the front pages, but actually what you're seeing is the drought's worsening in the Midwest. Wheat costs are actually still very high historically. So they could get it both coming and going. In other words, employment weakens up, and so demand weakens up. At the same time, costs are up. So again, hate to be a bearer of a little bit of bad news here, but I think right now we're in a very cautious stance because of the data we're seeing. Hopefully it will pass.
Okay, now I know that you're not an expert in terms of what they're going to do in Washington. No one's got the crystal ball here, but if they don't do anything to the payroll tax holiday, in other words, if that expires, that's a direct hit to the paycheck, right? I mean, that's 2% right there.
It's 2%. So someone, $40,000, minus, minus $800. $80,000 minus $1,600. This is real money. And I've been making the point in my firm is like, the fiscal cliff, we're going off a cliff almost no matter what. We got taxes that are going to go up almost no matter what as we look at this. California tax increases are retroactive to 2012, January 1, 2012. What this will mean, food at home vertical is probably safe compared to other things, but we're going to have a big experiment here on tax policy over the next 6 weeks. And it remains to be seen what happens, especially if you remember our first part of this conversation, that some of the data is already weakening up a little bit.
Right. So are there particular stocks that you'd rather be in now over others?
Yes. Kroger. They're going to report at the end of the week. We just upgraded it. Now, when we upgraded it, we thought return on invested capital was going to be the focus. They'd start growing a little bit, which they talked about at their analyst day. But we also said when we upgraded it, it's a great safety stock. In other words, when things get tough, Kroger is one that does pretty well because they're taking market share. So we like Kroger in this environment.
Always got to ask you about Susser Holdings, right? That makes you smile. That's Texas. This is a company, family-owned, operated. Give me any update on Susser?
Texas is almost like a whole different universe, and Susser is doing very well. So we're sticking with Susser as well.
I want to thank you very much, as always. Scott Mushkin joining us from Jefferies & Company. Appreciate your insight into the grocery store aisle. All right, now you can watch even more of Taking Stock. Just download Bloomberg's BTV Plus iPad app. It's free. It's at the iTunes App Store. That's Apple. This is Taking Stock on Bloomberg.
Finding a fiscal fix. As politicians scramble to avoid economic catastrophe, some of the world's biggest investors and brightest minds are sitting down at the same table, armed with solutions to dodge the fiscal cliff. From Wall Street to Washington, they're speaking exclusively with Trish Regan in a Street Smart Fiscal Cliff Summit, Wednesday on Bloomberg Television.
Gives you more quality inclusions than any other resorts on the planet. Now get a $350 airfare credit plus save up to 65%. Call your travel agent or 1-800-SANDALS. Certain restrictions apply.
Car insurance customer service reps. How can you tell whose are the nicest? Well, our competitors seems friendly. And at 21st Century, so does ours. See, puppies don't lie. But drivers who switch from Geico to 21st Century save an average of $508 a year. Smart puppies. Call 888-589-2121. 21st Century Insurance. The same great coverage for less.
Dig it, 21st.
Today's market update is brought to you by the Tel Aviv Stock Exchange. Today's market update was brought to you by the Tel Aviv Stock Exchange. Taste.
Some thought that Jacob would never breathe on his own. Now, he does. And that one day Merab might eat solid food seemed impossible. Now, she does. Here at St. Mary's, you won't hear words like never or impossible. From premature birth to serious illness to traumatic brain injury, these kids receive highly specialized rehabilitation here and at home. Because at St. Mary's, we believe in possible.
Do you owe the IRS more than $10,000?
Ameristar Tax Centers has a team of experienced enrolled agents and tax professionals that are licensed to represent you before the IRS.
I've been negotiating as an enrolled agent with the IRS for 29 years.
They can stop the collection activity, negotiate with the IRS for you, and get you maximum relief.
We'll take the weight off your shoulders so that you don't have to deal with the IRS anymore.
Call for your free tax relief information now.
Call AAG today.
This is Taking Stock on Bloomberg TV, radio, and online. I'm Pimm Fox. Let's take stock of today's market action. Dow Jones Industrial Average losing 89 points, a decline of 0.7%. S&P 500 closing at 1398. It lost 7, down 0.5%. The Nasdaq was lower by 0.3%. It shed more than 8 points. Now, I just want to take stock of some individual movers in today's market action. Shares of Monster Beverage, the shares closing 11% higher today. The energy drink maker getting a boost after Goldman Sachs analyst said the Food and Drug Administration's response to questions over the safety of energy drinks was encouraging. The FDA said in a letter today that there's no reason to think energy drinks are unsafe when used responsibly. All right, BlackBerry maker Research in Motion tumbling 10% today. It's the biggest decline since June. BlackBerry's market share slipping 1.5% from nearly 7%, from 7% down to 1.5%. That's just in the last 3 months as iPhone 5 sales boosted Apple's share of the market to 48%. That's all according to Kantar World Panel Comtech. And after spending most of last year rebuffing a suitor, Ral Corp Holdings says yes, it agrees to be acquired by ConAgra. The nearly $7 billion deal creates the largest producer of private label packaged foods in North America. Shares of ConAgra also rose 5% on the news. They're committed to their $1 a share dividend. Now, all this week, Bloomberg is airing a series entitled Startups here in New York City. It's called New Hack City. Today, Christina Alessi profiled the e-commerce company Etsy, which builds itself as the world's largest marketplace for handmade products. Christina, how big of a business is this?
Well, look, Etsy is trying to capitalize on this trend that big is bad. People want unique products in their life. They want something that isn't mass-produced. So to answer your question, they generate about $700 million in sales. So it's a pretty big company. In fact, probably not so much of a startup anymore, and it's been growing. Actually, if you compare sales to last year, they booked about $500 million in sales, so we have a $200 million jump already this year. Big business, potentially even bigger, but keep this in mind, it is a drop in the bucket when you talk about the overall e-commerce industry at $261 billion in sales, and that's only going to grow. You know, this week we saw eBay reach an 8-year high on this idea, investors thinking that more and more people are going to buy their stuff online.
Sure, but when you talk about Etsy, just to be clear, though, you're talking about a company that allows individuals to sell their own handmade, or however they make them, crafts and various types of projects online. It could be anything from a greeting card to box, anything that has got a personal touch, jewelry that they make at home, right?
Yeah, absolutely. And, you know, that's tricky for Etsy because what they don't want to do is expand into categories where there are manufacturers on the site, right? Because then you lose the whole homemade, organic origin.
You lose the authenticity of what it is you're actually representing to the end customer.
So it's a fine line. And, you know, I know we were talking earlier about another company out there. Do-it-yourself manufacturing is becoming more and more prevalent, right? So is a manufacturer just a big company, or can it be a person too?
Right. That's looking for a distribution system, in this case, Etsy.
Right.
Well, what about investors? How much money have they poured into this?
Well, earlier this year, they got $40 million in their latest round of financing. They've had several rounds. Like I said, it's a pretty mature company, basically to expand internationally. So they want to take this brand to Germany, to France, thinking like, you know, maybe someone in New York wants a handmade good from Germany, France, Italy. Not a bad place to be. In total, investors have poured about $90 million into this company, hoping that it will go public or potentially be bought out by, you know, who knows, Amazon, eBay.
Indeed, the sort of internet version of an artisan's marketplace. What about the challenges? I mean, competitors out there?
There are definitely some competitors starting up, but the nice thing about Etsy is that it's got such a far ahead jump. You know, it's got such a heads up on exactly. Right. So it's got a lot of sellers on the site already. What it has to do is generate more revenue, and one way to kind of boost that is to offer more services to sellers to make themselves stand out. So they're offering themselves as sort of a partner to a seller. Let us help you market your goods. For that benefit, you have to pay us an additional fee. That helps generate revenue.
Indeed, you can maybe turn your hobby into a business. Indeed. Thanks very much, Christina Leshy. And you can catch all of Christina's full feature on Etsy tonight. It's at 6:45 p.m. Eastern, only on Bloomberg. Now, coming up on Taking Stock, we see their products everywhere. It's called a barcode. We're going to talk to the chief executive of the company behind the technology, try to find out how they're improving the way we shop and the way medical practitioners care for patients. That's next.
Bloomberg's Taking Stock is brought to you by MFS Investment Management, offering innovative solutions for financial professionals, their clients, and institutional investors.
If you didn't come to work today, it would matter. People need your guidance. Portfolios need your experience. It's your job to walk the line between risk and return so that a retirement can become a reality. When you're in charge of 1,000 tomorrows, you need better insights. In fact, you deserve them. MFS, Investment Management for Investment Managers.
Nice.
Get in.
Santa?
What the ho-ho heck were you thinking? Imagine if I bought a mechanical uke from my lawn. It's creepy, right?
Yeah, that'd be creepy. It'd be real creepy.
Try buying something that'll bring you years of happiness. All right, you're back on my nice list.
This holiday, listen to the voice of reason at Acura's Season of Reason sales event.
Visit your local Acura dealer. Luxury, intelligently priced.
Logistics helps you find value in business by not only trying to reduce costs, but also enhancing the customer experience.
We listen to the customer, understand what they want to accomplish. Then you build your solution to help them meet their company's objectives.
UPS offers unique solutions for each of the respective industries that we target. For healthcare, it might be a temperature-controlled solution. For retail, it's focusing on the direct-to-consumer experience. High-tech, maybe it's product launches. But there's a vast array of solutions that we try and tailor to each of the targeted industry segments that we serve. Technology has changed this industry tremendously. It creates a greater customer satisfaction.
We spend a lot of time sponsoring research, looking at where the market's going, to try and give some thought leadership to the customers.
We have the capability to help them uncover unique value in their supply chains that allow them to enhance their customer experience and grow their business.
Music is a universal language. But when I was in an accident, I was worried the healthcare system spoke a language all its own. With United Healthcare, I got help that fit my life. Information on my phone, connection to doctors who get where I'm from, and tools to estimate what my care may cost. So I never missed a beat.
We're more than 78,000 people looking out for more than 70 million Americans. That's health in numbers. United Healthcare.
This is Taking Stock on Bloomberg. My next guest is the chief executive of a company that leads a nearly $10 billion tracking technologies market. Talking about a technology behind barcodes, radio frequency identifiers. So all converts physical transactions into digital information. Joining me now for a CEO sit-down, we have Zebra Technologies Chief Executive Anders Gustafsson. Anders, good to have you with us. Thanks very much for spending time. Explain for those that are not familiar with the history of barcodes, how important have they been to the way retail operates?
I think they're essential to how retail operates.
I think the first supermarket that used retail or barcoding came up about 30 years back, and now you can't really do anything in a supermarket or in a retail situation without using barcodes.
Now, do each of the different stripes on the barcode represent a different piece of information in terms of what the product is, how many of the product there are in inventory, and so on?
The pieces, the actual coding of the barcode it's really an electronic identifier. And then you have to go into a database that sits in a computer somewhere to really understand, translate that identifier into a SKU or what that is, if that's blue jeans or a shower cap or whatever that might be.
Now, being able to translate that information is applicable not just to grocery store items, but also in the medical world. Explain what you're doing.
Yeah, medical, almost any industry today needs it. And one big reason that medical or the healthcare industry is adopting it very fast now is that it's one of the foundational technologies for electronic health records. So we really, you know, our technology is really helping in healthcare to both provide better, safer care, but also more cost-effective care, which is obviously very important.
Tell us a little bit about RFID and what that market is like.
So RFID, that's basically a barcode, electronic barcode, you can say. And it's a market that's been growing quite nicely over the last few years. It's taken a few years for it to kind of find its own. But today the market is about $5 billion. And we expect that by 2016 it will probably grow to about $10 billion.
And is this going to be adopted even more by the apparel retail industry, or who's going to be using RFID products?
I think it's a very versatile technology that's going to be spread very widely. You know, today we're doing, I think retail is our largest vertical market for passive RFID. You know, we do things like enable customers to get, you know, increased visibility into their inventory, so more real-time views of what they have.
So you can find out what products are leaving the store more quickly and which products obviously you need to replenish.
Yeah, so if somebody comes in and want to buy a pair of blue jeans, they have 5 piles of jeans that look all the same. So it's a little hard to find the actual size that you were looking for or something. So this enables the shopper to have a better shopping experience, but more easily find the good they're looking for, and they buy it and they walk out happy. So better for the brand, they get good revenue for it, and they can have less inventory because they don't have to replenish things they already have, and they're less likely to run out of goods too. So for a retailer to get much better cash flow because they good revenue, less inventory, hence good cash flow.
Talk a little bit about the actual machinery that's necessary to create the barcodes and to read them, because this is not just a little chip. This is a whole supply chain that exists.
Yeah, so the technology is basically there's a chip in the bottom of it, and it has an antenna, and we tend to encode that into that chip, that RFID unit, so that it basically gets that electronic barcode, you can say. And that can then be used in all sorts of different things. But in retail, it often is put on a piece of clothing in a sewing shop in Asia, and follows the entire supply chain into the store and
right to the point of sale.
Right to the point of sale.
But then you also have the use of these kinds of technologies in factories that are used to sort products that go to different distributors, or even that are added to other parts.
Absolutely. So in transportation, logistics, lots of other areas. But in retail, there's also other things where you start getting into more of the shopping experience. So you can put it on RFID on garments, so you take it into a fitting room. You can, you try it on and say, and the person takes it back out again, doesn't buy it. The retailer can say, well, 25 people has taken that garment into the showroom or the fitting room. Nobody bought it. Well, there's a nice looking garment, but it doesn't fit very well. Got to do something with it. You can learn things from that, or you can bring it in and you can hold it up in front of the mirror, and the mirror will sense what product it is, and they can then show you other types of products that might go well with that type of an outfit, to create an outfit for you.
I want to thank you very much for helping us understand a little bit more about what goes on with what we think is something ubiquitous, a barcode and RFID tags. Thanks very much, Anders Gustafsson, Chief Executive of Zebra Technologies. Appreciate it. All right, coming up, Facebook gained some friends. The stock is up 36%. That's in the past 2 weeks. And we're going to look at why the social network is getting a lot of likes. That's next.
passionate belief, and the foundation on which Merrill Lynch has been built. Today, our financial advisors lead from a new position of strength. Together with Bank of America, they have access to more resources than ever before. A steadfast commitment to help you achieve your financial goals in life. That's the power of the right advisor. That's Merrill Lynch.
Some commitments are easy to define, yet hard to deliver. What is impartiality without real independence? Minimize conflicts of interest and the ability to focus on customer priorities. We at New Edge specialize in brokerage, and we strive to be the best so that you can fully concentrate on your strategies. New Edge, the critical difference.
Bloomberg Link presents the Hedge Fund Summit. On December 5th, leading hedge fund managers and investors convene in New York for one of the most important annual gatherings of the hedge fund community. Sign up today at BloombergLink.com.
Hi, I'm Christine O'Day, and I'm a realtor at Connecticut Classic Homes. I love working with all my clients and helping them to find their dream home. It's so nice to be able to make such a big impact on their lives. The most important technology for me as a realtor is my computer, a mobile phone, and of course my printer, because I'm constantly printing things. Well, one of the things that really makes us stand out is all of the attention to detail that we give to our clients, and that's also one of the things I love about my Brother color printer. You know, we have to show the houses in the best light possible, so all of the color photos that I print for my clients showing a house, I want it to look just great for them. I can do everything from my home office, copying, faxing, and scanning, and it's fast and it's reliable, and I love the design of this printer. It's clean, sleek, and elegant, and looks great on my desk.
World financial markets change even when you're not at your desk. Bloomberg gives you a snapshot of what's moving, plus top news, charting, and ways to track your portfolio right on your iPhone, iPod Touch, or iPad. Download the free Bloomberg application available at the App Store and stay in touch with your money wherever you are. Bloomberg Mobile.
Shares of Facebook dropped significantly since its May initial public offering, but have crept back up in the past month, thanks to recent confidence from some analysts. Now, joining me now to explain the social network's November rally, we've got senior West Coast correspondent John Ehrlichman. John, explain a little bit, if you can, other than that people want to buy the stock of Facebook, why would it be up, what, 36% in the last 2 weeks of trading?
Big move, yeah. A lot of the Wall Street analysts have come out with encouraging reports. There are two main reasons for this move, Pimm. One is how they feel about the prospects for Facebook's advertising business, and the second is post a lot of stock potentially being available to be sold, not necessarily being sold, and investors breathing a sigh of relief. Let's start with the advertising story. So remember, heading into their most recent results, some people were worried about whether they were going to figure out their whole mobile strategy. They came out, they said they generated about $150 million in revenue, making up almost 14% of their total amount from mobile ads, and people said, wow, that is really encouraging. Investors and analysts have also been encouraged by them basically opening up the door to outside advertising technology partners to help them sell more display ads. That's something they've done with Facebook Exchange. And then the fact that you've seen these massive stock lockup expirations where insiders can theoretically sell, that these big events have come and gone, now opening the door for the analysts to come out with some relatively rosy reports.
And John, I mean, you also get these rosy reports from some retailers that say, oh, we've put ads on Facebook and look at the results. We've seen some good progress.
Well, I'm glad you mentioned that, because a well-known analyst, Gene Munster of Piper Jaffray, is going to join us on Bloomberg West tonight to talk about the Facebook commerce opportunity. The idea of Facebook moving even more into the world of commerce, maybe more directly battling the likes of Amazon, potentially introducing a want button to go with their like button. And he thinks by 2015 they could generate in the neighborhood of $10 billion in commerce-related revenue. But what exactly does that entail? scale? Is it advertising and commerce combined? We'll ask him about that on Bloomberg West tonight.
Looking forward to it. Thanks very much, John Ehrlichman, our senior West Coast correspondent. More on Bloomberg West coming up at 6 p.m. Eastern, only on Bloomberg. Now, coming up on Taking Stock, there is a new trend in retail. It's called showrooming. Yes, it's one word, and we're going to tell you how it works and who it could hurt. That's next.
Bloomberg Enterprise, your exclusive look at the leadership and strategy behind America's most intriguing and growing businesses. This week, Eat Up. Life Kitchen founder Steve Sidwell's mission to change how Americans eat.
A solution is create food that actually tastes amazing.
Bloomberg Enterprise, tonight at 9:30 Eastern and Pacific, and on the free Bloomberg TV Plus iPad app. Brought to you by Brother Printers. Brother at your side.
Bloomberg's Taking Stock is brought to you by Interactive Brokers. Stocks, options, futures, forex, and bonds worldwide at lower cost. Visit interactivebrokers.com for more information.
Central banks are flooding the world with cheap money. Interactive Brokers will lend $1 million at just 1.3% for every $200,000 in a portfolio margin account. See our high dividend scanner for the many hundreds of stocks that yield over 5%. Interactive Brokers. Stocks, options, futures, forex, bonds worldwide from one account.
Innovation. What it isn't is something that happens step by predictable step. It doesn't always stop at the lights. Sometimes it goes backwards to go forwards. It goes up blind alleys. It zigs and it zags. It wiggles. And then it lets rip. Your job is simple. Just give it the right environment.
The Mercedes-Benz winter event is back with the perfect vehicle that's just right for you, no matter which list you're on. Lease a 2013 C250 for $349 a month at your local Mercedes-Benz dealer.
Hello, I'm John Sunt, President and CEO of Altegris, a leading provider of alternative investments. My colleagues and I have been in this business for decades through many market ups and downs. As you know, there are thousands of alternative investment choices. Finding, evaluating, and gaining access to the best-of-breed managers can be a real challenge. At Altegris, that's all we do. In today's uncertain market environment, many advisors are considering alternative investments for their clients' portfolios. We focus on finding the best, researching the best, and making these managers available to our clients through the Altegris family of funds. Find out what over 5,000 advisors and 100,000 investors already know.
Learn more about trusted alternatives and intelligent investing at altegris.com.
Online holiday shoppers turned Cyber Monday yesterday into one of the biggest shopping days ever, spending 30% more than they did last year. So what effect does all this have on online shopping? What does it have on brick and mortar retailers? Well, Abe Garver is here as a principal of investment banking firm Focus, and he helps companies, founders, and investors estimate value of privately held internet retailers. Abe, it's a pleasure. Thanks for coming in. I was featuring you by thinking about this term that you've described called showrooming. What is showrooming, and what does that have to do with internet online spending?
Great. And Pimm, great to see you, and thanks for having me back again. Showrooming, as we pull the camera back, this is a customer decides that they want a product. They go to a brick and mortar store, test it out, kind of feel it, and once they've said, yes, I like it, the next question becomes price. And here's what gets controversial. In the case of buying a notebook, I flip it over, I look at the barcode, and I pull out my smartphone. It's got an Amazon app that will work on the iPhone or the Android, and it tells me...
It takes a picture of the barcode. In fact, we just had the Zebra Technologies chief executive on.
I wanted to mention that.
All right, so we take the picture of the barcode, and what do? We go price shopping.
And voila, we see 3, 4, 5 different options to buy that same exact product from different retailers at different prices.
This has got to hurt a lot of people, right?
It really does. So quickly on the prevalence, 45% of people that have a smartphone or a tablet have done showrooming. As you were talking about, you saw this this weekend. 25% of the online purchases this holiday season have been mobile. And of that, 10,000 people were surveyed over the past couple of days, and 13% of those went into a brick and mortar, looked up the price, and self-reporting have said that they actually purchased from a different retailer.
So they're literally, maybe even, I mean, just to use an example of Best Buy, they're standing at the Best Buy counter, they've decided what they want to buy, and yet they go online with their smartphone right there in front of the salesman, and they say, thanks very much, I've decided not to do it, but they click buy and they're done.
Right.
This has got to be what? This has got to be good for Amazon.com.
Exactly. Definitely good for Amazon.com. And this really price matching is the second trend in addition to showrooming. Price matching, also real quickly, it's just companies coming out, your Best Buy, your Target, saying, you know, if you do come to us and you look at the product, you like it, and you see it less expensively online, we'll match it. Well, you know, long story short, that's not true. I've been on both the Best Buy and Target website in the past 12 hours. Best Buy, if it's an online retailer price, forget it. They're not going to do it. Target, there are 27 stipulations you have to get through before they will match the price of an internet retailer. Hence someone using their smartphone clicking buy at Amazon.com. Right, exactly. So that second trend is not a trend at all. It's nothing's happening. So what that means is our third trend, and I'm you know, revealing this, kind of coining this phrase on your show, and that is showrooming to doorstep. And what I mean by that is, and these are, you know, what I'd like to talk about investment ideas for the viewers, and specifically kind of in the supply chain. So if we think, we have the shopping cart, once we hit purchase, everything that takes place, including the RFID we just talked about with Zebra, everything that takes place up to when it's delivered to my doorstep, that's the supply chain. And those are the companies involved in that I think are really... Right, like a UPS or indeed a FedEx, indeed. You got it, you got it. We've got to leave it there, but I want to thank you very much, Abe Garver, joining us from Focus, the investment bank. We got to pay attention to showrooming, price matching, and then we got to look at the supply chain, the companies that deliver all those brown boxes. All right, thanks for helping us shop online. All right, that does it for today. Tomorrow on the program, find out how to invest in recovering real estate. We've got Skybridge Capital's Troy Gajewski. Thanks for taking stock. I'm Pimm Fox. Good night.
We now offer phone service as low as $1.70 a month with Magic Jack Plus. That's $19.95 a year. No computer needed. Nothing changes. And now keep your old phone number. That's right. Keep your old phone number. Get Magic Jack Plus at Best Buy.
Do your part. Visit feedingamerica.org/hunger and find your local food bank today.
At Options Express, we're all about options trading. We create easy-to-use, powerful trading tools for all.
Look at these streaming charts. They're totally customizable, and they let you visualize what might happen next. It's genius.
We knew you needed a platform that could really help you elevate your trading, so we built it.
Chances of making this? It's a lot easier to find out if a trade is potentially profitable. Just use our trade and probability calculator, and there it is.
For all the reasons you trade options, from income to risk management to diversification, you'll have the tools to get it done.
Strategies, chains, positions, we put them all on one screen. Could we make placing a trade any easier? Could we?
Around here, options are everything.
Yes, Mom. I'll place a long call to you tomorrow. I promise.
Open an account today and get a free 13-month EIBD subscription when you call 1-888-280-41.
It's only been a year, and already Autoblog calls the Hyundai Equus a set of leather-covered brass knuckles flying towards the jaws of Audi, BMW, and Mercedes-Benz. And Kelley Blue Book says a car like the Equus may very well become the new face of luxury in America. Gee, it's all happening so fast.
Now, lease a powerfully luxurious 2013 Hyundai Equus for $679 a month, exclusively at your local Hyundai dealer.
Ask me how I've never slept better.
Why not talk to one of the 6 million people who switched to the most highly recommended bed in America?
Ask me about my Tempur-Pedic.
Ask me how I can finally sleep all night.
Introducing the Tempur Weightless Collection. Tempur-Pedic's perfect support with a light-as-air feeling. A slight bounce makes changing positions effortless for a feeling of weightless comfort. Along with free delivery and no-interest financing for up to 48 months. Sleepy's, the mattress professionals.
/TV and never go to the post office again.
Live from Pier 3 in San Francisco and Bloomberg's world headquarters in New York, welcome to Bloomberg West, where we cover the global technology and media companies that are reshaping our world. I'm Nicole Lappin. Let's get straight to the rundown.